mean, you're in the business of stress, and for you, it's a daily grind. But for the person who's making that deal on that day,
only maybe a few times in their life,
that's that's a lot on the line. That's their dream coming true. I mean, this is big stuff for people, right?
Yeah, and I mean, I try to take a lot of the emotion out of it, but the challenge is when you're buying a home, it's the biggest purchase of your life, and when you're getting the mortgage, it's the biggest debt of your life. So I think that you can be a little bit emotional, and we try to make that go very smoothly, and we try to take as much of the emotion out of there, because for us, it's business. It's black and white. But we also need to remember that there's 50 shades of gray in terms of real estate and mortgage lending and a lot of different flavors.
So how do you do that? Do you...
I think it takes some balance.
Yeah?
Yeah, it takes some balance, and I think it takes some maturity, and I think it takes a lot of experience. And I mean, I've been doing this for 19, 20 years and over 6,100 transactions and $1.6, $1.7 billion worth of mortgages. I always say that we've seen everything, and I've said this before on the show, but every day I see something new. And it's just the ability to work through that new thing. It's to work through the advice. I had a guy on the phone today that was, he really loved his lender, but he really wanted to seek the advice of an unbiased mortgage professional. He called us. And I said to him, I'm like, why do you want to move? Like, why do you want to change your situation that you're in now? He's like, well, I have a standalone mortgage. I have a line of credit. I owe money on this. And I'm like, but you have so much equity in this property. Why are you using an unsecured line of credit at like 10%? Why are we not leveraging the equity in your property? You're up for renewal. You're a free agent. I think taking a slightly larger mortgage, but also having that home equity line of credit, it was the right call for this guy. But I don't know if his lender quite got there with him. And, sometimes you're more attached to the lender that you're dealing with than you need to be because, at the end of the day, these people in the branches, and we know they turn over so much, like it's changing, and that's why I have a job. But their number one job is to return the profit to the shareholders. And my number one job is to make sure the customers are getting really the best setup for their needs. And that's really the difference of what we do every day.
All right. So when it comes to some clients, I mean, you obviously have quite a spectrum here, and I would think that give some advice, because you want people to be on the ball and engaged, but you don't want them to be a pain in the butt either, right? Where they're needlessly sending you emails and leaving voicemails, and that's got to happen,
line.
Right? Yeah.
It is a fine line. I think I do a good job at that expectation setting, and it's really all comes down to communication. And I look and see, sometimes things go well, sometimes it doesn't go as well. That's just the nature of everything that you do in your life. But it all comes down to the communication. I think if you can communicate effectively, set what the expectation is, have the asks, have the deadlines, have the follow-up, I think it goes very smoothly. And we would do a great job at holding people's hands. But I think also just bringing it back to the dollars and the cents. I think taking the emotion out of it, hopefully the mortgage lending piece of people's lives is the easiest piece. Buying the house, selling the house, that sometimes can be the harder piece. We want to make sure that mortgage lending piece is the easiest for people. At least that's my goal.
Okay, so based on all the transactions you mentioned, how many 160?
Like 6,100, 6,200, something like that.
Okay, so of that, what percent would you say are deals that don't happen on the closing day for whatever reason?
Like delays.
Yeah, delays. How frequent is that?
I think they're less now than they used to be honest. Yeah. I think 19 years ago, delays were probably quite common. And now I have a very low tolerance for delays because people's finances are on the line, and people need a roof over their head. Yeah. So for me, delays are not cool, and sometimes the delays are outside of our control, and I would say 99% of the time they are. But sometimes we wear them for whatever reason. But again, it's around expectation setting. So for an example, we get instructions sent to a lawyer oftentimes 30 days before a mortgage is set to fund, whether that's a purchase or refinance or whatever type of transaction that we're doing. But then mysteriously, the documents don't go to the lender that are required until the day of closing or the day before closing. Like, why? You've had these documents for 30 days. Get your client in 4 days prior. But I think sometimes it's that expectation setting that the lawyer has set with the client. Oh, client, you come in when it's convenient for you. No, you come in today. And if we want this to go smoothly, you need to be here and you need to give me these 3 things. Yeah. And I think sometimes it's just, the nature of humans that we let the customer drive the bus. Yes, I'm asking the clients a lot of questions. I'm getting their feedback. I'm getting their input. But I'm giving them 1, 2, or 3 recommendations. And based on that, we're running with it. And then I will tell them how to move forward. And that's why I think customers come to us and they don't walk to a bank branch. They want that advice. So once we've given them the advice, they make the decision on how they move forward. Then we're going to drive this forward and make sure that it's going to be as efficient and smooth as possible for borrowers. We've all been through transactions in our life. It's not just mortgage lending and not just real estate, but we've all been through transactions that could have gone smoother. And it comes down, I think, a lot to communication. And, we really pride ourselves on, being top notch, especially in that aspect.
All right. So when it comes to the lenders themselves, you obviously have close relationships with the lenders, I'm sure. But what's that like to deal with? Is it becoming less personal, less predictable? How could you describe those relationships?
I think the differences now between lenders are more than they ever were. And I think it's more personal now than ever, especially the more volume that we do, the deeper entrenched relationships we have with some of these lenders. Like, I'll just use an example for Scotiabank, and I'm just going to put it out there. We're a big Scotiabank shop. We do a lot of business with them. They've been a great partner of mine over the last almost 20 years. And I have a relationship manager who lives and works in Halifax Regional Municipality, and she approves and declines every single file. So guess what? If I really need her to go to bat for something, I can pick up the phone and say, hey, deal with this. I need you to go to bat for me because I've gone to bat for you for ever so long. So I think in that sense, the relationships are good. On the flip side, we deal with other lenders that it's more like a call center type environment where we don't have as close a relationship. Yeah, I've been into a lot of their underwriting centers. I know the people. I'm not the norm though. The average mortgage originator is probably not going to see these people. I'm in these meetings. I'm, going for lunch. We're sitting with training. We're sitting with them and watching them do their job and stuff like that. That's not the norm. I think dealing with more of a call center environment, I think is more normal. But, the one thing that I will say, it doesn't matter what lender we use as a mortgage broker. The mortgage broker is local. And the mortgage broker is a small business, and the mortgage broker is providing you with that expert advice. And they're really unbiased to any lender.
Yeah.
They are biased to the consumer, and that's really the number one thing that you need to really be worried about.
When it comes to brokers themselves, do you think that that the broker space is pretty much where it should be in Halifax and Nova Scotia? Do you think there's...
I think it's juvenile compared to other markets.
Is that right?
I think it's still, when I started almost 20 years ago, it wasn't as cool to use a mortgage broker. I think part of the reason, especially, growing up, I mean, you're from New Brunswick and I grew up in rural Nova Scotia. You were taught not to wrong the bank. And maybe there was only one bank in your town or maybe only a couple. There weren't a lot of options. And I think there was a stigma probably coming from the 80s, 70s, 80s, that people that went to a mortgage broker couldn't be approved by their bank branch. And it's really that conversation is flipped. It's the consumers that are looking at getting expert advice are going to a mortgage broker. The consumers that are looking to get a really great rate are going to a mortgage broker. And mortgage brokers have access to lenders and products that your bank branch just doesn't have access to. So the smart consumers are going there. And I think the conversation has flipped, but it's taken a long time. And I mean, Todd, we're having these conversations. Who knew that we could talk so much about mortgage lending and there were so many nuances, but there certainly are.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.